for me. Okay, so I'm Lori Atwood. I've spent the last 20 years in finance with a small break to have my daughter, and even then I was still consulting at the same time. But my bio's in the back of the slides, and you can read it when you get a minute. But I've spent the last 20 years basically helping corporations, small businesses, families, individuals make better financial decisions, is what it boils down to. And after hearing myself say the same thing over and over again for 20 years, I thought it's time to institutionalize it. And that's what Fearless Finance is. I want you to gain more control over your finances so that you can realize the vision of your company or your soon-to-be company. Also, I am shockingly lame at switching slides. So just yell if I'm like blah, 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 and I have not switched the slide, because I've been known to do that. Okay, the 5 keys to financial success. I wish I could stand up here and give you some magical, sexy, glamorous key to financial success. But unfortunately, it is no different than what my Depression-era grandma said to me, which is, you work hard, you spend wisely, and you make good, well-informed decisions. So we're going to talk about that last part now, making good, well-informed decisions. Let me show you what I mean with a personal story. 10 years ago, I was the CFO of about a 20-person internet company. Actually, it's like 13 years ago now. And we sold it. And I took some time off, and I decided I wanted to do something with a social mission. So I went to work for a small company out on the West Coast, 6 or 7 employees. It was run by a woman who had a Stanford MBA, and they specialized in sort of helping startup women entrepreneurs. Fabulous. I reported directly to the founder. It was great. I walk in there my first week, and I'm like, this woman does not know what her financial situation is in this place. So I ran a quick cash flow, which now, after 20 years, I do in my head when I look at something, but I did the cash flow for her. And I said, you know what, I have to lay myself off, because you don't have enough money to pay me, right? You don't know enough about your business to know what you bring in every month, or what you spend every month, or whether you can expand, meaning hire new people, or how you would even be able to expand. So what I want to do is make sure that none of you get caught out like that. Okay? So where do we start? We start at the top line. We start with revenue. Knowing your revenue inside and out is not only good for your finances, it's good for your clients. Because the only way that you can really know what their needs are is if you understand how they spend money with you. Okay? So let's say you provide some sort of therapy, and I did hear that there were some people like that here, whether you're a psychologist, whether you're an acupuncturist, whatever it is. Let's say your initial fee for somebody to come in and do an intake, blah, 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 is $100. And then the follow-ons are $80 an hour, right? Now, I don't do that for a living, so I'm making the numbers up, so just bear with me on that. But you get a lot of initial traffic, you get a lot of people coming in and taking your therapy, but they don't follow up. So they don't get the benefit of your entire protocol, which doesn't benefit anybody really, and you don't get the benefit of taking them through your whole process so you can know where to tweak and do things to make changes, right? Well, what if you turned around and said, I'm going to make a package of an initial intake and 4 follow-on for whatever the price that makes sense is. And suddenly, people are so vested by the 4th time they come in for your consultation that they're making their next appointment with you. Right? You can't know that unless you know where your money's coming from. You can't make those decisions. So what do you need to know about your revenue? You need to know 3 things about your revenue. 1, you need to know how many customers you have and whether they are repeat customers or they're what I call unique customers, meaning if you sell cupcakes, they come in for 1 cupcake, they never come back again, right? So you got to know a little bit about your customers, but you also have to know how many you have. 2, you need to understand what I will call throughout this seminar your unit of transaction, unit of sales. Do you get paid by the hour? Do you get paid by the cupcake? Do you get paid a commission off of a transaction? How do you get paid? And the 3rd thing is something that most of us think of when we think of revenue, and most of us know, which is, what do you charge? It's $4 for a cupcake. It's $120 for an hour of therapy. It's whatever it is. But you need to know all three of those to really know how your customers are reacting to your business. Okay? If you have different products and services within your business, fabulous. Do the analysis for all of those. Because where I want you to get to eventually is that you know when a customer walks in your door, you know how much they spend with your business per month. Whether they're buying a cupcake, whether they hire you for catering, whether they're taking your cooking class, all of those things are priced differently, right? But you know that somebody comes into your business and spends about $150 a month with you. When you're at that point, you are in a really good place financially, financial knowledge-wise, I should say. Your burn rate, that's your expenses, right? That is what goes out every month. Now, for most startup businesses, smaller businesses, anyone basically who's not GE, if you have a financial issue, it's on the revenue side generally. It's rarely on the spending side because people are so tight-fisted when they're just starting up. But let's go through quickly what the issues are, just so you know. First, the trick is when you're starting up, when you're small, when you're getting your first, second, third, 40th, 50th client, to keep your fixed costs low while letting your variable costs be whatever they are. You will never have zero costs. You will never have zero fixed costs, so don't worry about that. But if you pay $100 to rent an office for the month, which is, I'm obviously making that number up, right? Bear with me, I'm old and addled and there's only so much math I can still do in my head. If you are paying $100 a month and you have 10 clients, it's $10 a client for that office space. If you have 100 clients, it's $1. You see that goes down as you get bigger, right? So as you're into your 500th client, that will matter less. Variable costs, again, going back to a cupcake maker, you need a certain amount of butter and whatever, sugar and flour, but you don't buy that until you get an order. Somebody comes in, I need 10 dozen cupcakes. Fine, I'm going to go out and buy the butter for it. Most small businesses shut down due to insolvency in the first year, maybe at the outside 2 years. Don't get choked by fixed costs. That's how that happens. Okay? I'm going to have a load of time for questions at the end too, so don't worry about all of that. 2, think about growth. Think about it before it starts happening to you. Know how much it costs you to acquire a new customer, and know how much it costs you to sell more product to your existing clients. Okay? Know the difference. Be deliberate. Don't just go out and paste ads all over the place, all over the internet or whatever, because you don't know if that makes sense yet. The third thing, think about big upcoming expenses. Do you need to move offices because they're changing your building or whatever it is? Do you know that your delivery van is going to need a new transmission in the next year? Right? Do you have a tax bill coming up? Do you have fees to an association or a conference? Whatever it happens to be. Make sure you know what's coming up and don't get surprised, because what happens when you get surprised is you start to flash the plastic, right? And sometimes when you're starting your business, you are flashing home plastic, right? And then the little OCD vein in my head starts going, ah, like that. All right, we're going to get to all of that in a minute, but let me go through this slide first. Know your, did I change it? Yeah. Know your income and your own needs. This may seem obvious, but you'd be shocked how many people don't do this. Know how much money you need on a personal basis. Whether you're the only breadwinner, you got another partner who does it, I don't care, but know what you need to bring in for your family before you go using your business as an ATM machine. Okay? And I see a lot of smiles here because I know that happens and everyone does that. Everyone does that. So if you've done the math that I'm going to talk about here in a few minutes, and you know that your business makes $2,500 a month, right? And you need $5,000 a month for your life, you know, do you need to go out and get a part-time job? Maybe that's the answer. You know what I'm saying? You've got to know those numbers by heart. Okay. I had a psychologist client, and she was starting her practice, and she was really devoted to a certain mission of providing care for lower income people too. So she had a tier A and a tier B for her pricing. So she asked me to help her figure out what the right mix was for tier A and tier B so that she could still make enough money for herself and her son, because she was the only breadwinner, right? So I said to her, here's the number. You can only take 10 hours of patient care in that lower income tier, period. Now, if you think that that's an issue for your mission, think about it this way. When that person with the 11th hour of tier A or whatever you want to call it comes into your office, if you don't say no, you're jeopardizing your own solvency and you're not able to take care of those other 10 hours a week of that person. Know what your limits are, and you should be able to figure it out after we finish this. Okay. This is another one that people think is very obvious that isn't always done. Integrating your business with your household, right? Has anyone here ever gotten a check from somebody, from one of their clients, cashed it and paid off a personal credit card with it? Everyone has done something like that, right? Okay. This is a no judgment zone, as you well said, and I'm not going to say anything about it, but here's what I am going to say. Here's how you do it. The minute you first take in your first dollar, you go to your bank and you set up a separate account. A separate checking account, a separate PayPal account if you do transactions with PayPal, a separate credit card, most definitely a separate credit card. Now, on day 1 of the month, until day 30 of that month, you register all of your revenue into that one account. On day 30, you take all of the expenses that you've had for that month and you subtract them. You call your accountant, because I am not allowed to give tax advice, and you subtract the taxes from it. And then you take the rest of that money and you wire it into your account. If you can't live 30 days, fabulous. Do it on the 15th and the 30th. That's fine. Not only does the IRS frown upon this mixing, but it's a bad business practice. And here's why it's a bad business practice. If you know your household needs $5,000 a month to function, because we just figured that out on our last slide, right? And you're going around using your business as an ATM, you may be taking money out of your business for your $5,000 that you must have that could go into growing more profitability out of your business. And what you're doing in the long run, and with that sort of a short-term view, is you're shrinking your profitability. And I'm going to go into quite a bit of detail in a few minutes about that. Okay, so let's think long-term. You're going to hear me say this a million times. Be deliberate. Don't let things happen to you. Make sure you know they're going to happen beforehand. Okay. Just like I tell people when I advise them on their household finances, I'm going to tell you this too. Know what your top 3 priorities are for your business. We talked about in the last 2 slides what your priorities are for your household. I need X amount of dollars a month for my household. I need whatever I need to retire, and I've got to save it out of my business. Fine. Now, let's talk about your business, right? The thing to remember about goals is, my personal view is if you have more than 3, you've got a laundry list and it's really hard to focus. You can have fewer than 3, certainly, but I wouldn't have more than 3. And the most important thing to remember is that you quantify your goals. If you want to add a new product line, if you want to cut your hours down for your business, whatever you want to do, there's a price. If you want to add a new product line, figure out how much it's going to cost you to put that product line out there, to market it, to create it, to have inventory, whatever it is. Figure out what you think that product is going to bring into your business. Also, remember that all your other legacy products, because all the boats rise with the rising tide, you may get a bump in revenue for those too. Figure out what that math is and know it. And I'm going to tell you why you need to know it here on the next slide. Where is this all leading? This is all leading to the almighty cash flow model. Okay? Now, If you want to go out and get venture capital financing, if you want bank financing, if you want to make a partnership with somebody else who's doing a business like yours, if you want to get new clients in, if you're going to hire employees, anyone sitting on the other side of that table from you is only going to care about how much cash you throw off every month. Period. I have spent a lot of years on both sides of that table, getting finance, helping people to get finance, whatever it happens to be. This is not news to me. This is all that matters. Okay? Now, oh, excuse me. Got plugged up on my notes. Okay. Now, I don't want to see your eyes rolling back in your head or some look of horror on your face, because we're not talking about the sort of accountancy cash flow statement that maybe you studied freshman year in accounting. I'm not talking about that at all. I'm talking about a very simple cash flow statement. Very primitive. If you can add, subtract, multiply, and divide, you can do it. Okay? Now, there's no fancy finance. There's no fancy financial formulas. You're not going to be measuring the area under a curve or any of that kind of thing. If you don't like spreadsheets, you have three choices. You hire someone like me to do it, or you get comfortable with a simple spreadsheet pretty quick, or you use a pencil and paper. It was good enough for our grandparents. It works still. You're going to need a calculator, and you're probably going to need a big eraser. But you can do it. So don't come to me and be like, I don't like spreadsheets. That's not a good enough reason. The last point on my slide tells you what basically will go into this cash flow. I want to see it, I would want to see it from you monthly for 12 months, and then a total at the end, and then the following year estimates and the following year estimates. At least 3 years. My preference is 5, because you're all still going to be in business in 5 years, right? Okay, do a best, medium, and worst case. When you go to the bank, they're going to force you to do it anyway, so just do it. We all know what that means, right? You want to see if there's a horrible rainy day and if there's a fabulous scenario. Don't get hung up on the accounting stuff. I have never taken an accounting class in my life. I have learned it all the hard way, right? You don't need to know, you don't have to worry about inflation. Trust me, there's not going to be any material inflation in the 3 years that you're doing this, right? There's also no worries about, and I just heard what all of you do, none of you is pressing metal and having some big factory with some big metal stamper that you're going to have to worry about amortization of equipment and depreciation. Forget it. It's not what it's about. Don't get hung up on that stuff. Here it is. Look, it's only 2 columns big, and one of those columns is in words. It's not that bad, right? Okay. Let's start with revenue at the top line. That's always where you should start. I said this a few slides ago. I'm going to repeat it. I think I repeat it again later in the seminar, actually. How many clients? Are they new or are they recurring? What is my unit of transaction? Do I get paid by the hour, by the class I teach, by the cupcake I sell? And then, of course, what am I priced at for that? Right? Expenses. Expenses are the easiest part here. List them all. Go to your checkbook, go to your credit card, go line item by line item. You will see natural categories come out. I'll list a few. There's always office supplies. Everybody needs toner and pencils and pens. There's always some sort of web presence thing. You need server time. You need email marketing. You need whatever it happens to be. There's always office services. Somebody's got to clean the office. Maybe it's you. But you've got an accountant, you've got an electrician, whatever it is. There are natural categories. Take each line item. If you spent $27 on toner, put it under the office supply thing. Total them up at the bottom after 1 month, and that will tell you what you spend each month, basically. Again, we're looking for broad brush strokes here. I don't care about the dollars and cents. Get pretty close, right? Now, there's a third box right up here labeled worksheet. I have never done a cash flow that did not require a little extra computation, simple as it is. But the psychologist that I'm using in my example here, she knew how many patient hours she did per week, right? But didn't know how many she did per month. You cannot multiply that by 4. It has something to do with the rotation of the earth. But that's not a month, right? The other issue is that there are very few people that work 52 weeks a year. And you know, if you're an entrepreneur, that if you're not working, you're not getting paid. There's no paid vacation, right? So there are a lot of people that don't work 12 months a year. If you have no child care in August, you're not working, right? So those things have to all be, now I said 52 weeks for the year here, but you can see that you can put in whatever is relevant to you, right? And that will tell you how many hours a week how many hours a month you work. And it goes right into your cash flow. Not so scary. This is what it looks like when it's blown out, right? Now here I have September, October, November, and December. It's too crowded for a slide for me to have 12 columns, but you should, okay? And then you have a total at the end, and then you have the next 2 years, right? It's not that difficult, but what you can see, once you do it, we just started the 10th month today. So you would have 9 months of actual numbers. And the following 3 months, you might have 8 months if you're still working on the 9th month, whatever. The other months will be forecast. What you can see is what months are good and what months are bad and what months are average. Most months are average, so don't be surprised if that's what you see. But if you see a big decline in August again, and then you have something that goes up, way up, January, February, and March for some reason, you need to know that. Especially if you need to make up some of that income for those weaker months. You can't know that until you do this. Okay, I told you I was going to talk about margins, and I am. Work smart and work hard, okay? The key for the cash flow is not just knowing where you are, but also being able to run tests and see what are the possibilities with your business. I'm going back to my psychotherapist example, just because it's easy. Let's say she decides to run a group session. She wants to do group sessions, right? So she's done her competitive analysis. She knows about what she should be charging. She figures she can do 1 session per week. She'll have 4 patients in that session. Okay? If you look at the bullet points here, I'm going to trip over this and dial. That's what's happening. Okay. Profit margin for the group is 40. What does that mean? That means for every dollar she takes in revenue, she wires 40 cents into her household account. So obviously the higher that is, the better off everybody is, right? Now, I'm making these numbers up. If you're in retail and you saw 40%, you'd be jumping for joy, right? So it's different in everybody's field. But, so her group margin is only 40%. When she's doing individual clients, it's 64%. Why would anyone do group? Well, you've got 2 masters, a financial master and what I call a substantive master, right? Maybe she needs to have better outcomes for her patients. Maybe they need group therapy. Maybe all of her competition does group therapy, and if she doesn't offer it, it's going to be a little awkward for her getting new patients, right? So what do? Then you start to think about how you can trade off the financial decisions with the substantive or business decisions, whatever you want to call it. Can I run more groups? Well, if she runs 3 groups, she's up at 69%. 3 groups may waste her emotionally and intellectually. So she has to think about whether she can actually do that. You know your business needs, and you know your financial needs. So you've got to optimize those 2 and come up with what's going to work best for you. But you've got to service both of those masters. That is what a CFO would do if you could afford to hire one. That is all they do all day. I know, I used to do it, right? I geek out on that stuff. I think it's really fun. But if you don't, that's the reason you have to know what you're doing. Okay. All of this is leading up to securing your future. That's what it's about, right? At the end of the day, you want to make sure that you go and sustain this business on into however many years. So now we've done a lot of the math, we've done all the math, you know how important it is to know what your current financial situation is, you know how to run tests and look at your margins. What do you need to know to be properly secured into the future? You have to do these things, and I will guarantee you that your future will be more secure. There are very few places where somebody can guarantee you, right? I'll guarantee you here, okay? Be properly insured. I listed a few things here, but your technical associations, the forums you belong to, whoever it is you go to where you chat about your own business, they're going to know what proper levels of insurance are for you and what you do. Just get there. Don't slack on that. Get there. I am married to an employment lawyer, and this is all I ever hear about, right? It's incredibly important because by the time they get to my husband, people are losing money. So make sure you get properly insured. Create expense lines for things that are annual, semi-annual, quarterly. I'm talking about taxes, dues, fees, right? If you pay $1,200 in taxes a year, again, I'm making that up, right? Then instead, if you have to pay them quarterly or at the end of 1 year, have an expense line that you put in $100 for. Do it every month. Because if you don't, what are you going to do? You're going to break out that plastic and pay the IRS that way. And that is a quick spiral downwards. Not only is that a spiral downward for your business, that will plunge you into a huge problem personally too. Don't do it. Treat it as an expense. 3, if you have extra money, remember we calculated what you need each month for your household. If you need $5,000 for your household each month, and on your good months, January, February, March, you have more than that, fill these 3 buckets in the order that I say them. Fill your rainy day fund. Have $3,000 to $5,000 in a rainy day fund. When the transmission goes on that delivery truck, when the server goes haywire and there's smoke coming out of it, whatever you need, get the money in there. Again, we want to avoid being surprised and having to put it on credit. The second bucket, once that's filled, the second bucket is your bad month bucket. If August you only make $3,500 usually because people are away and what have you, fill that with some dough. I suggest several $1,000s. It depends on your business, right? So that when you hit August, you can take money out of that so that you have enough in your household. So you're not draining your business otherwise, and you're not getting into debt in your household, okay? The third bucket is getting those goals taken care of. Start doing what you need to do to acquire more clients, to start buying whatever you need to open up a new product line or open up a new store. Then when you're done with those 3 buckets, wire the rest of it into your household account. And you will get there. If you stick with it, you will get there. And it could happen fast and furious. Now the last one is a biggie, okay? Now you know how to do a cash flow. Don't hire anyone. Don't start a new product. Don't partner with somebody. Don't take on new responsibilities or cut your hours until you run it through your cash flow. Be honest with yourself. If you see, even after you're trying to optimize, like I was telling you about the group sessions, once you've tried to optimize, you still can't make it work, don't do it. I know that's not what you want to hear necessarily, but that's my job. Don't do it until you can do it, because you're going to have a world of pain. So that is always my big one in the end. Now, where do you start? Oh, there I go, not doing my slides. Okay, where do you start? Start at the top line. Start with the revenue, right? Go through the old log books, wherever you keep records of what your revenue is, and write it down and learn those 3 things. How many clients? Are they new or are they recurring? What is my unit of sales? And what do I charge? Go to your expenses. Get your statements. Write it down, line item by line item. Go into the natural categories. Total them at the bottom. You'll have an idea of what you spend each month. Look for your margins. Know off the top of your head what products provide you with the highest margins and which ones don't. Okay? So that you can know where you should focus your energy. Know your competition. Make sure you are in line. You're charging something that's in line. You're treating your clients to the same thing. If your clients don't mind going to people's homes to have whatever done that they need done, then that's normal for your sector, right? You don't need a big fancy office maybe. And then focus on your 3 goals, your 3 priorities. Keep them always in the front of your mind, right? Because if you have 2 projects, you have no projects. Somebody very intelligent said that once, but it sticks with me, right? Keep your focus. And most of all,
will you say that again?
the last one?
Yeah.
Oh, keep your focus on the 3 priorities, the 3 goals we talked about a few slides ago, right? Keep that in the front of your mind. If you're doing more than one thing, you're not doing anything at all. Everything should be aimed at those 1, 2, or 3 goals, right? And lastly, congratulate yourself on your grit for doing this on your own. It's hard out there, and ask for help when you need it. So now I'm going to turn off my video thing and take, hopefully, loads of questions.